So first of all, I want to introduce ourselves. My name is Rachel Hines, and I'm the Marketing Manager here at Thesaurus Software. And we are delighted to be joined by Revenue for today's webinar. And they're going to discuss what you need to know about the Employment Wage Subsidy Scheme. So for today's webinar, Colette Hayden, who is the Assistant Principal at Revenue in the Medium Enterprises Division, was due to present today's webinar, but I know Colette is having some internet issues. So I think Anne will be jumping in to present today's webinar. After Revenue's part of today's webinar, I'll jump back in again just to run through some quick tips on returning to the workplace. And finally, at the end of the webinar, we will have a questions and answers section where we will answer any questions that you may have. On the panel for the Q&A session, we will be joined again by Anne DeLay. And also from the Thesaurus team, we have Audrey Mooney, who is our Customer Support Manager, Paul Byrne, who is the Managing Director here at Thesaurus Software, and Laura Murphy, who is our Chief HR Officer. If you have any questions, you can type them into the questions box on your control panel at the side of the screen, and we will try to get through as many questions as possible. Bear in mind that we do have over 500 people logged on at the moment, so we won't have a chance to answer every single question. This webinar is being recorded, and all attendees will receive an email later today with a link to the recording of the webinar. So it's no problem if you do need to leave at any stage. Also in the email later today, there will be a copy of the presentation slides that we are using today, or you can also download the slides right now if you wish on the Handouts tab of your control panel. We have added some useful documents and additional resources to the Handouts section on your screen, and these will also be included in the follow-up email later today. So now that all the housekeeping is out of the way, I'm going to pass you over to, I think, Anne to present Revenue's presentation today.
Thank you, Rachel. So my name is Anne DeLay, and I'm going to talk to you today about the new features of the current Employment Wage Subsidy Scheme, also known as EWSS, effective from the 1st of July 2021. Just remember, please, this presentation is based on the position as of today, the 26th of August, and because things constantly change, you should please continue to consult our website just to ensure you're up to date. Next slide. Just a quick refresh first on the key features of EWSS. EWSS can be claimed by eligible employers in respect of eligible employees from the 1st of September 2020. The subsidy is a flat rate subsidy which is paid based on an employee's gross weekly pay, which will be covered in more detail in later slides. EWSS is operated through normal payroll and taxation systems, so employers will be required to continue to operate payroll taxes in real time on all gross payments made to their employees. An employer should register, deregister or re-register through ROS. On the My Services page, click Manage Tax Registrations in the Other Services section. Then click Register/Deregister next to EWSS. As registration and re-registration cannot be backdated, it's important an employer is registered before the pay date they wish to claim in respect of. Employer and employee eligibility and tax clearance will be covered in the next few slides, but just a key point. An employer must have tax clearance to register for EWSS and must retain tax clearance to continue receiving subsidies. In line with international practice, a list of employers availing of EWSS was first published in January 2021 and will continue to be published quarterly on revenue.ie. In relation to employers' PRSI, while employers are required to report the full rate of employer and employee PRSI, on receipt of payroll submissions, Revenue apply a reduced rate of employer PRSI of 0.5% in respect of employees for whom a subsidy is payable. Employer monthly liabilities are revised accordingly, and any resulting PRSI credit is offset against the monthly PRSI liability. There are safeguards to minimise abuse of the scheme, and I'll talk further about these later. From the 21st of July 2021, all employers are required to complete and submit through ROS a new online monthly EWSS eligibility review form, and I'll cover this in more detail later. Next slide. The subsidy is based on the employee's gross weekly wage. The gross wage includes notional pay before the deduction of pensions or salary sacrifice, but excludes any Department of Social Protection benefits which employees may have mandated to be paid to the employer, such as illness, maternity or adoptive benefits. Where pay frequency is other than weekly, the employer will calculate the gross weekly wage and divide by the number of insurable weeks to a maximum set by the system, and there's good information on this included in the EWSS guidance document on our website. If employers are found to manipulate the system by changing pay frequencies, pay dates or altering amounts to maximise subsidy, they will be liable to recoupment of the subsidy received together with interest, penalties and possible complete exclusion from the scheme. EWSS is part of the normal payroll process for PREM and deductions, with the payroll being taxed in the live environment. The EWSS indicator involves populating the other payments field on the payroll submission with a value between 0 and 1 to indicate the subsidy request. This should not appear on the employee's payslip. Subsidies are generally paid within 2 working days, with some minor delays at the start of each month. Where there are multiple employments, each eligible employer makes a claim for subsidy in their own right for the eligible employee. The legislation includes anti-avoidance provisions re manipulation of payroll, which includes instances where contractual gross pay, which would otherwise have been paid, is deferred, suspended, increased or decreased. This does not extend to instances where eligible employers retain eligible employees during periods where they are not partially or wholly occupied and pay them gross pay equivalent to what they would have received if they were to make a claim for PUP. This concession will remain in place for existing employees until the 1st of September when the PUP rates reduce. At that stage, employees should revert to be paid for the hours worked at their contractual rate of pay. However, employers are reminded of the anti-abuse provision, which prevents replacing one employee with 2 at lower pay rates to maximise subsidies. Employers should also ensure any changes to terms and conditions are not contrary to employment law. Next slide. For your information, this slide outlines the rates of subsidies payable for each employee, which range from €203 to €350 per week, with no subsidy payable if an employee is paid less than €151.50 or more than €1,462 per week. Consideration is being given to an employer contribution to employee wages from October 2021, and further clarity on this, together with the subsidy rates which will be payable from the 1st of October 2021, will be provided next month. Next slide. As you are aware, to be eligible, an employer must experience a 30% reduction in turnover or customer order values as a result of COVID-19. From the 1st of July 2021, we see a change in the eligibility assessment period. For pay dates on or between 1 July and 31 December 2021, this 30% test is assessed by comparing turnover or customer order values for the calendar year 2021 to the calendar year 2019. By extending the eligibility period to 12 months, it ensures the maximum number of employers are eligible, as many businesses remained closed or limited in their capacity to trade due to public health restrictions in place for the first half of 2021. Whenever the resumption of normal trade occurs, such businesses can potentially generate turnover or customer order values of up to 70% of their values for the whole of 2019, while they're open for the remainder of 2021 and remain eligible to claim support under the scheme. Next slide. If a business was not in operation on the 1st of January 2019, the comparative period is the period from the date of commencement to 31 December 2019, where the business commenced trading between 1 January and 31 October 2019. If the business commenced trade on or after 1 November 2019, The review is based on projected turnover or customer order values from 1 January 2019, or the date of commencement if later, to 31 December 2021, prepared as if COVID-19 had not occurred. Next slide. The requirement for each employer to undertake an eligibility review at the end of every month remains in place. If, as a result of undertaking that assessment, they determine they are no longer eligible, they should deregister on ROS from the first of the following month and cease submitting EWSS claims. However, if circumstances subsequently change and employers are again eligible, they need to re-register on ROS before the pay date in respect of which a claim is made. It's worth reminding everyone that registration or re-registration cannot be backdated, so please ensure you're registered before you make wage payments. To assist employers with undertaking this eligibility review, a new requirement has been put in place from 21 July, whereby employers are required to complete and submit through ROS an eligibility review form. We're currently contacting all registered employers who have not completed the eligibility review form for June and July. While the filing date for the June and July form was the 15th of August, payment of subsidies will not be interrupted until the 1st of September next week. So please ensure all employers have filed their ERF before that date to avoid interruption in their payment frequencies. And it's 2 ERFs that need to be filed by that date, the one for June and the one for July. In addition, we're also reminding companies who are still registered for EWSS but did not make a claim for EWSS in July or August, so appear to be ineligible, to deregister for EWSS. If they become eligible again at a later date, they can re-register at that time. Next slide. I will now show you a few screens and explain the steps in submitting this form. The first step in the process is to log into ROS and select EWSS Eligibility Review in the Client Services section of My Frequently Used Services. Next slide. You will then have to select from 3 options on the screen. Number 1 is New Business. This is to be selected if you have commenced a trade on or after 1 November 2019. Number 2 is Registered Childcare Provider. This is to be selected if you are a childcare provider registered under Section 58C of the Childcare Act 1991. And number 3 is All Others. For employers with more than one business type within the 3 categories listed at the initial stage of the ERF completion, that is, new business, registered childcare provider, or all others, employers should complete in respect of all others, where they fit into the all other category as well as one of the other 2. You should ignore the registered childcare business or the new business when completing the figures in the ERF. Where employers have a number of eligible businesses, one ERF should be completed with details of all the eligible businesses included. Next slide. For those that select new business, that is those that commenced to trade on or after 1 November 2019, employers need to agree to the following declaration by ticking the agreement box. I declare that I have correctly completed this form, which exempts me from completion of the monthly eligibility review screens. Next slide. Again, similar to step 3 for new business, registered childcare providers are also required to agree to the same declaration. Next slide. Step 4 for both new business and childcare providers sees employers being directed to the Sign and Submit section of ROS, where they will be directed to confirm their submission using their digital certificate. They will then receive an acknowledgement of the submission for their records and may wish to print this off and retain it for their records. Next slide. In relation to all others, there's a bit more involved, as you would expect. Next slide. In the initial submission, the June submission, which had to be completed between the 21st of July and 15th of August, 15th of August, employers are required to provide details of their actual monthly turnover or customer order values for 2019. Please ensure this is completed correctly, because once submitted, which is step 4 of the process, it cannot be altered. If errors are made when completing the form, employers should contact us through My Inquiries, setting out the reasons why an amendment is required. Next slide. The next screen you are directed to requires actual monthly turnover or customer order values for January to June 2021. Again, this screen cannot be altered once submitted. If errors are made when completing this form, please contact us through My Inquiries, setting out why an amendment is required. The second part of that screen requires, in the initial submission, that employers input the projected July to December values that were relied upon when doing the eligibility review at the end of June. Your projected turnover or customer order values for each month for the remainder of 2021. Next slide. After clicking Next, you will then see this screen pop up. This is Revenue System undertaking a systematic check comparing the 2019 actuals with the 2021 actuals plus projections. Next screen. If you meet the 30% reduction, you will see this screen with your figures as input without the warning in red. If you don't meet the 30% reduction, you will get the warning in red. You are no longer eligible for EWS. Please deregister and stop submitting EWS claims. No further EWS claims should be submitted and you should deregister immediately. For businesses which commenced to trade between 1 January and 31 October 2019, the system currently annualises the 2019 figures input. As this sometimes gives an incorrect result, a new warning has been included on the screen for such businesses as follows. Important for businesses that commenced to trade between 1 January 2019 and 31 October 2019, the total turnover figure displayed for 2019 is an annualised total. This may not match the total turnover figure that you have calculated for 2019. If the monthly figures you have input are correct, please continue to sign and submit your ERF. The annualisation of the 2019 figures has the unintended consequence of incorrectly stating that some employers are eligible or ineligible when they are not. We're currently working on a fix for this, but in the meantime, if an employer is ineligible, completes an ERF even though they're not required to do so, and the system incorrectly states they're eligible, they should still not claim EWS and should repay any EWS claimed in error. Where the system incorrectly states an eligible employer is ineligible, please contact us through My Inquiries and we will ensure payment of subsidies will not be interrupted. Next slide. Once completed, employers will be required to sign and submit after agreeing to the following declaration, which will be included in the final screen by ticking the highlighted box. I declare that this represents a true and accurate record of actual monthly turnover / customer orders and my best estimate of forward-looking monthly turnover or customer order projections. At this stage, employers will be directed to confirm their application with their digital certificate. You will receive an acknowledgement of the submission for their records and you may wish to print this off. If employers do not file the monthly declarations, they will see a suspension of their EWS claims, so it's imperative that this is given your immediate attention. Next slide. By the 15th of each month for the remainder of 2021, employers are required to provide details of the actual turnover for the previous month and ensure their projected monthly turnover or customer order values for the remainder of 2021 remain valid and re-input them. So by the 15th of August, you need to complete the August actual values as well as the projections for September to December. By the 15th of October, you'll be inputting the September actuals and all the way through to the 15th December when November actuals are to be returned. It is expected that the projections for future months have been prepared using a reliable set of budget assumptions, and it's expected they won't change materially between monthly updates. Please take care when completing this screen. Amendments can be made once the figures are submitted, other than projections for the future months if necessary. So if errors are made when they're provided in a previous month, contact should be made through My Inquiries, setting out the reason for the amendment. Next slide. So you'll see it's not a new requirement. Rather, it's an online capture of information you are already required to have as part of the conditions of the scheme. It has been designed to be an aid to employers to ensure they remain eligible and avoid the potential for subsidies being claimed in error and potential repayment issues arising. Employers need to ensure figures input are completed net of VAT, and just to note, similar to real-time reviews undertaken with subsidy claims, will be undertaking real-time reviews of eligibility review forms and making contact with employers where discrepancies or other issues arise. Next slide. From the 1st of June 2021, employers can warehouse overpayments of EWSS which they are unable to repay as a result of the impact of COVID-19 restrictions. Period 1 of the warehousing period ends on 31 December 2021, and period 2 runs from the 1st of January 2022 to the 31st of December 2022. An interest rate of 0% applies to warehoused debts in period 1 and period 2. A reduced interest rate of 3% per annum would apply for period 3, which commences on the 1st of January 2023, on warehoused balances outstanding until the debt is discharged. Employers whose tax affairs are dealt with in Revenue's personal or business divisions will have their EWSS overpayments warehoused automatically. LCD and Med employers can make an application to have their EWSS overpayments warehoused. In such cases, we'll make relevant inquiries and request supporting documentation to satisfy ourselves that a business is unable to repay its EWSS liability in making a decision to grant access to the debt warehouse. Other tax payments and filing obligations must be kept up to date for the duration of the debt warehouse period and for any subsequent agreement period to guarantee the reduced interest rates of 0% in periods 1 and 2 and 3% in period 3. Failure to meet current tax obligations will result in the warehouse facility being withdrawn. Full statutory interest will be applied to the outstanding balance from the date of removal from the debt warehouse. Next slide. Now that the scheme is well underway, Revenue are reviewing this real-time data received, identifying potential issues, and contacting employers seeking clarity if required. If we identify high-risk practices, we'll contact an employer directly to ensure eligibility and that the scheme is not being abused, including through manipulation of payroll. It's imperative employers retain records supporting their registration and continued eligibility for the scheme for potential review in the future. Next slide. Consequences of a determination by Revenue of abuse of the scheme can result in the complete exclusion from the scheme at employer level, possible repayment of subsidies received with interest and penalties, and possible criminal prosecution. Next slide. Our website has a lot of additional information on EWSS, including guidelines which are updated as the scheme progresses, and indeed the July EWSS guidelines were updated at the start of this week. So I would recommend that employers regularly access these resources to ensure you remain up to date. So now, thank you for your attention. We'll now be taking questions. So I'll hand you back to Rachel.
Thanks, Anne. That was a really informative presentation there. And just before we get to the questions, I just want to do another section today. But in the meantime, if you do have any questions on the EWSS, feel free to type them into the questions box on your control panel at the side of the screen. So next we're moving on to part 2 of today's webinar, and we're going to keep this part quite short and sweet to allow as much time as possible for questions. With just 1 week to go until September, many businesses are planning on returning to the workplace from next week. Some on a full-time basis and others on a more hybrid model of employees working some days from the office and some days from home. So here I want to talk about how Connect can help your business as you return to the workplace. So first of all, what is Connect? Connect is an optional payroll add-on, and it works alongside both BrightPay Payroll and Thesaurus Payroll Manager. The payroll is still processed on the desktop application, but the payroll information is stored online on a secure cloud server. With Connect, you can benefit from automated cloud backups and a secure online portal for employers and employees. So I'm going to jump into the online portal now to show you some of the different features and how they can help with the return to work. Here we are in the online employer dashboard, and you can see a notification on our dashboard where an employee has requested annual leave. You can set up managers as users on Connect so that they can be responsible for approving leave for employees within their department. And you can also set it up so that these managers don't have access to the payroll information or any confidential documents. Before approving the leave request, you'll be able to click into a company-wide employee calendar, displaying who is on leave and when, so that you can ensure adequate staffing levels before approving the leave. So here you can see there are 4 employees on leave on this particular date. Another feature that can help you with returning to the workplace is the Documents tab. And with Connect, you can upload any type of document or resource that you want to distribute to your employees. So for example, here I have a company handbook and a contract of employment, but you can also upload various policies detailing COVID procedures and restrictions that employees must pay heed to upon the return to the workplace. And if I click into a document, you can also send notifications to employees so that they get a notification on their device. And you can also access an activity log where you can monitor the date and timestamp of which employees accessed the resource or document and when. So it's a great way to communicate with your employees, but also protects you as an employer, as you have evidence that employees have seen those policies, so they can't claim that they were unaware of various employee responsibilities. Just to point out a couple of other things that you can do with Connect. Because the payroll data is stored online, you can click into the Employees tab to access each individual employee's profile, which includes their payslips and personal contact details. Next is Reports, and here you can run any type of report that has been saved in the payroll software. So it makes it very easy to run payroll reports on the go from any internet browser. And the last tab here then is Revenue. And here you can see how much is owed to revenue and a breakdown of how this amount is calculated. So that's the online employer dashboard, and employees also have access to a self-service portal which they can log into on an internet browser or on a smartphone and tablet app. And the app is available to download for free on any Android or iOS device. The employee will receive notifications on their device when a new payslip is available, and they'll also get a notification when a HR document has been shared with them or when an annual leave request has been approved. Within the app then, the employee can go into Documents to view payroll and HR documents, including a full payslip library. Within the calendar, they can view their past and scheduled leave and request leave. Or within My Details, they can view and update their personal details to ensure GDPR compliance. So it's a really powerful app with self-service features so that the employees can do a lot of the admin-heavy tasks themselves, rather than coming to you, for example, for lost payslips or for leave balance inquiries. So I'm going to finish up there with the sales plug, but if you do want to find out more, we do run online demos of Connect on a daily basis, so please let us know if you want to book onto one of the free online demos. So that brings us to the end of the presentation today, and I know we've covered a lot on today's webinar, but we will send everyone an email later today, and this will include a copy of the slides and a link to the recording of today's webinar. So it's now time for the questions and answers. And if you have any questions, feel free to type them into the questions box and we will try to get through as many questions as possible. As I mentioned, however, we have a lot of attendees logged on today, so unfortunately we will not have a chance to answer every single question, and I see a lot of questions have come in already. So for our questions and answers today, we're joined again by Anne DeLay, and we have Audrey, Paul and Laura from the Thesaurus team as well. And Audrey, you have been keeping an eye on the questions as they've been coming in, so I'll pass it over to you to look after the questions.
Thank you, Rachel, and good morning, everyone. Okay, so we'll try and avoid the repeat questions. There's quite a few of them. Okay, so the first question there is, should an employer who deregistered before the 31st of July and was not claiming EWS for July still submit the ERF?
An ERF is only required to be submitted by an eligible employer. So if you're not eligible, then you don't need to submit the ERF if you're not claiming after July.
Perfect, thank you, Anne. So if an employer claimed EWS in January, February and March 2021 and fulfilled the criteria being 30% down each month, but now when they do the EWS eligibility review based on actual and projected figures, they are not down to 30% overall for the year, would the EWS they claimed be clawed back?
So the EWS test, the eligibility test for the first half of 2021 was the first half of 2019 versus the first half of 2021. It wasn't a month-by-month eligibility review. You were to look at the 6 months together. So provided looking at the 6 months together, they had an expectation to meet the eligibility criteria, and they were going to be down to 30%, then what they claimed at that time won't be clawed back. So there are two different eligibility periods, the first half and the second half of 2021 looked at separately.
Perfect, thank you, Anne. For warehouse taxes, how long will companies have to pay them back? So, I mean, some of these I know you covered in your presentation, but...
Yeah, for warehouse taxes, it at the end of period 2, which is at the end of 2022, you need to have entered into a repayment schedule with the Collector Generals. And each business is different, and it depends on the type of business, the quantum that's in the warehouse as to the length of time that will be agreed between the business and the Collector General for repayment of the taxes. So there's no one-size-fits-all answer to that question. Unfortunately, it's something to be negotiated between the business and the Collector General.
Thank you, Anne. Can you ask if the eligibility review needs to be completed for someone who received 1 week of EWS in July but then deregistered?
Yeah, we've seen some instances where people have claimed for 1 week in July and then deregistered. So we're assuming if you're deregistering, it's because you're not eligible. So if you're not eligible, then the query is whether you should have actually claimed that first week in July or not. So you either, I would say, you are entitled to it for the full month of July, which means you need to complete the ERF, or else you were not entitled to it for July, which means you need to repay the EWS that you claimed for the first week in July. And again, I just make the point that EWS is based on pay dates. It's as was TWIS. It's not based on when the wages were earned. It's based on the date that the payment of the wages was made. So maybe that person felt they were entitled to it because it related to wages earned in June. They maybe feel they were entitled to it, but it's the pay date that's the relevant test and not when the wages were earned.
Yeah, and if they shouldn't have claimed for that first week, Anne, you would want a correction submission removing that indicator, wouldn't you?
That's correct, yeah, that's correct.
Okay, thank you. If a new staff member is employed, so if a new member of staff is employed in the company and the company is eligible for EWS, can the company claim for that employee?
Yes, there's no restrictions on the date that the employee has to be employed by you, like there was with TWIS. So any person that's taken on at any stage, you can claim EWS in respect to them, obviously assuming that, you know, it's not two people replacing one person and it's not connected, etc. So.
Yeah, we've had a lot of queries in relation to new employees or people thinking there was a change, you know, in July. So I'm not really sure where that has come from, but we get quite a bit of it. So.
Okay, no, there's been no change on that one.
Perfect. Can you please ask Anne, I submitted the ERF on the 12th of August and got a message on Ross to say it was submitted successfully. Yesterday I got a message in my inquiries on Ross that they did not receive it and have to have it by the 1st of September. Has this happened to anybody else, or is it an error on the system, and do I just go ahead and submit again?
Maybe if that person makes contact with Revenue, in some instances, some submissions in the early days were not actually saved by the system, but that's probably not what happened on the 12th of August. It may be the case that that notice went to the employer in error, but if they go in and try and submit the ERF, then if they have it done, the option won't be there. The other thing I'd ask them to check is there were 2 ERFs that need to be sent in at this stage. There's the one for June and the one for July. So maybe it's the case that they only submitted 1 and not 2. So I just say just go in and see if the option is there for you to submit June and or July. If what you sent in was received by Revenue, you won't have the option to complete. And if you only submitted 1, then you need to go in and do the second one.
That's great, thank you, Anne. The next question there is, can an employer claim EWS for an employee on maternity leave?
If they're making a payment to that employee on maternity leave, then yes, they can.
Thank you. Is the childcare industry still exempt from the 30% decline in turnover, or is that being changed next month?
At the moment, they're still exempt from it. We have no indication that that's going to change, but there's no, I've no reason to say that will or it won't change. And it's because they're exempt from the 30% reduction. That's why they're not required to give turnover figures as part of the ERF submission.
Okay. Do connected persons apply to limited companies, or can a limited company hire a connected person of the company director and claim EWS for that person?
The connected company or the connected person restrictions are set out in the EWS guidelines, and they do apply to limited companies. So I would just ask that person to actually consult our EWS guidelines, and that sets out in great detail what the definition of a connected person actually is.
Perfect, thank you, Anne. A new business started in February 2021 claiming for new employees no facility to submit each month eligibility form. Is this correct? Do they need to submit the eligibility form?
Yes, a new business is a business that for the ERF exemption is a business that commenced the trade after the 1st of November 2019. So that new business needs to go in, select new business in the first month, sign the submission, and that they no longer need to do anything on a monthly basis. We will be contacting certain new businesses at a later date, directly making contact with them, just to ensure that they do meet the new business definition and to make sure that they have the relevant comparison to support their EWS claims. And that comparison is the projections in this instance from February to December 2021, pre and post COVID.
Thank you. When you are deregistering a client for EWS on Ross, is it acceptable to upload the original agent-linked notification form, or are we expected to get a new form signed by the client?
No, it's not expected that you would have to get a new form signed.
Thank you. Revenue sent us an EWS compliance letter last week with a company listed that was not EWS registered. What should we do?
I would say go back to the caseworker who sent that letter, because there's a particular reason why that letter was sent out. I can't answer obviously what that was without the full details, but I would say just make contact with the person whose name is on that letter.
Perfect. The next question there, the EWS eligibility review option is not visible for me on Ross, even though we have been claiming EWS for all of 2021. How do we rectify this?
I would say make contact with us through my inquiries, just setting out your PPS or your tax reference number, and just setting out the information you've given there, and we'll have someone look in to see why that option is not available for you.
Perfect. Could it be to do with the cert that's being used, and could it be per?
Yeah, if it's an agent that's doing that question is coming from, so they can't see it in respect of one of their clients, then yes, there are issues with certs for agents, and that issue won't be rectified until possibly the middle of September. So again, if you make contact with us and let us know who it is, then we'll make sure that there's no stop in the payment, and you'll then, from the middle of September, be able to upload it. If it's a taxpayer themselves, then I can't see why it wouldn't be available unless they have been deregistered for a certain reason.
Okay, thank you. The next question there is, my business is a registered charity and is VAT exempt. However, I was asked to provide monthly figures on the ERF exclusive of VAT, which I cannot do. What should I do?
Well, if you're not VAT registered, then there's no VAT included in your turnover figures. So just provide the figures as they are, because there's no VAT included in them, and that's sufficient. Just whatever your turnover figures are is what needs to be put onto the ERF.
Thank you. Okay, we inputted all information on time and have been advised that that revenue had a technical error. Systems show actual 2019, however, we cannot input 2021 actual and projected, which they are dealing with, but we have not received any EWSS support for August yet. They're wondering what should they do.
Again, they just need to send in an email to us through my inquiries, just setting out that, you know, they have provided the information, they do meet the eligibility criteria, and that the payments are being stopped in error, and we'll ensure that the payment is actually issued.
Perfect, thank you. If the ERF is not submitted by the 15th, does it mean the subsidy is completely cancelled, or is it just delayed until the form is submitted later on?
It's delayed until the form is submitted later on.
Thank you. Do you include EWSS subsidy as income or turnover?
EWSS is not to be included as income or turnover, because you could have a crazy situation where including EWSS deems you ineligible, but by excluding it, you're eligible. So no, EWSS doesn't have to be included, and CRIS doesn't have to be included either when you're doing your eligibility assessment.
Great, thanks, Anne. How can the hospitality sector reasonably project their takings given the degree of uncertainty around COVID and future restrictions? Any advice?
You just have to do the best you can and just make sure they're reasonable and have the basis for the projections you have when we do come out and do examinations in the future. But a lot of the hospitality was closed for a good part of this year. So unless you're actually going to have a super bumper remainder of 2021, it would be very hard for you to breach the 30% test when you compare a full normal 2019 as against possibly 5-6 months of restrictions in 2021. It would be, you know, difficult to see how you'd breach the 30% reduction.
Yeah, perfect. Are there any reports in relation to EWSS you recommend are downloaded from Ross?
I don't think there's anything in particular that needs to be downloaded on Ross.
Perfect. Somebody's just asking, if they take on a new apprentice, can they claim EWSS for an apprentice?
Again, there's no restrictions on claiming EWSS for an apprentice. Now, having said that, it depends on I'm not fully aware as to how apprentices are supported or what monies employers get. So you have to actually have incurred the cost of the wages of the apprentice yourself. So if you think that you're paying an apprentice €300 and you're getting €200 of a grant towards that apprentice's wage, then effectively you're only paying the apprentice 100. So your subsidy will be based on what you're actually paying them yourself.
Perfect, thanks, Anne. Somebody's saying they input the gross amounts by mistake in the boxes, and how can this be remedied?
They need to just send an email to Revenue setting out the information that they input the gross by mistake, and just detail what the net is, and we'll go in and we'll amend the system.
Perfect, thank you. Somebody's asking, has the deadline for returning the monthly eligibility form for June and July been extended to the 1st of September?
The deadline was still the 15th of August, but we just decided not to stop payments until the 1st of September. So I suppose you could say it's maybe an extension, but it's a concession that we brought in just to give people a chance, because we saw a lot of people still hadn't done it and we were cognizant of holiday time, etc.
Perfect, thank you. Somebody's saying, my client began soft opening trading on the 16th of September 2019, therefore not a full month trading. They are required to fill out the EWS, but the half month of trading in September affects the EWS application. Can they adjust this in any way?
Yeah, that's the new business annualisation I spoke about earlier. So that is going to be amended in the system in due course. So at the moment, we'll just ask that you just input your turnover that you actually earned for that half month, and when the system is amended later in September, then you won't see a penalisation. If the system does result in you being deemed ineligible in error, then just make contact with us and we'll just setting out the full details of your circumstances, and we'll make sure that the subsidies aren't delayed.
Thank you, Anne. Somebody's just asking, what if a company commenced in December 2018 but had no sales in 2019? What do they compare the 2021 figures to, and how do they submit this to revenue?
So if you'd have started to trade in December 18, I don't know how you're trading if you're not generating sales, and what your definition of trading actually is. And if it's a case that maybe you have long-term contracts, maybe it's orders that you need to rely on, but there is an option for other reasonable basis in circumstances which are quite unusual, where you can't actually apply the turnover or the orders test. And if you're relying on some other basis, you just need to make contact with revenue first, just to agree that other reasonable basis with us.
Thank you, Anne. The next question there is the eligibility for EWS based on a month-by-month basis or year-to-date when comparing 2019? And I know you kind of covered this earlier on, Anne, sorry.
Yeah, no, it's fine, because there seems to be a lot of confusion around this, and I've actually come across some instances where employer are doing an eligibility review on a week-by-week basis. Your eligibility review is for the second half of 2019. You look at your turnover or customer order values for the whole of 2019, and you compare it with your turnover or customer order values for the whole of 2021. At this stage, you'll be looking at actuals up to the end of, practically up to the end of August, and projections then for September to December. You add those together, you compare those 2019 figures, 2021 figures with your 2019 figures, and if there's a 30% reduction, then you're eligible. The reason we ask that the eligibility review form is completed is to help you actually do that 30% calculation at the end of every month. So by the 15th of September, you'll be going in and you'll be putting in your August actuals, and you'll be doing that eligibility review test again to make sure that you do remain eligible for 2021. If at any stage you become ineligible, you deregister at that stage, but provided the subsidies claimed prior to then were claimed in good faith, relying on proper projections that weren't understated, then the EWS claim to date won't be clawed back.
Thank you, Anne. Somebody's just asking, is it possible to get a statement breaking down the refund received between EWS and the PureSci credit received? I know you can get it on the month you receive it, but I would like to get it from the date that EWS started.
I'm not actually sure is that possible to get it on ROS. I know that your monthly PureSci liability is net of the employer PureSci credit, but I can check that and get back to you.
Thank you, Anne. A couple of questions in, but I know, well, I feel you don't know the answer to this, but a few people are asking, when will the EWS rates for October 2021 onwards be released?
Yeah, we're actually very anxious to get them ourselves, and we know that it's very important that people, particularly yourselves, Audrey, get them sooner rather than later, so that any payroll amendments, if necessary, are done quick. We have no idea as to when we'll be told. I'd imagine that the government reopening plan will inform it, so I'd imagine it'll be the middle of September before we hear anything, but I really have no absolute date that I can say we'll know by.
Yeah, you're as keen to know as anybody, Anne.
Absolutely, absolutely.
Okay, somebody's just asking, gross pay for the purpose of EWS based on their annual salary. Is employee pension contributions to be included or added to the annual salary for the purpose of calculating the annual salary for EWS purposes? Is employer pension to be included also? So,
employee pension is to be included, but employer pension is not, doesn't have to be included.
Perfect, thank you. Somebody wanting to ask a question for Anne. I made an error in, well, they're all for you. Sorry.
That's fine,
I made an error in the EWS eligibility form in the actual figures. I would still be entitled to EWS. I sent a message through my inquiries and asked them to amend this for me. They replied back to say they're not able to do this. Can you explain what we should do?
Did they say they're not able to do it, but that they will release your payment? Because at the moment we're not, the system hasn't actually, the facility to allow us amend the actuals hasn't been developed. But if we're satisfied that what you sent in is correct, even though we can't amend the system, we'll still release the payment to you. So just if they told you that they wouldn't release the payment, just go back and ask that the payment is released pending release of the forms or of the facility to actually update the submission that you made. So we will actually release payments even though we won't be able to update the system with your corrected figures. Does that make sense,
Very
Audrey?
helpful, thank you. Absolutely, yeah, brilliant, thank you. I think you might have covered this in your presentation, Anne, apologies, but somebody just asking, can EWS be claimed for the same employee by more than one employer?
Yes, each employer looks at the employee as a, you know, a standalone employee. They don't have to look and see what other employers are paying them. That's assuming now that it's you know, a genuine employment, because we have come across some instances, unfortunately, where you know, employees are split across a number of connected parties just to maximise subsidies, and that's an abuse of the scheme, and you know, will result in the sanctions being applied. So provided it's genuine employment in each separate employer, then yes, EWS can be claimed in respect of each separate employment.
Right, thanks, Anne. Somebody's just saying clients ceased claiming EWS from the 1st of April 2021, but inadvertently did not untick one employee for April and May. How do they refund the overpayment? So I suppose this is another correction submission, Anne, really, isn't it, for those, that one employee?
That's correct. You just resubmit the payslip for that employee, ensuring that the EWS box is unticked for that employee, and that will generate a liability on our system, and that then can be paid through RevPay.
Yeah, and if so, you know, if it's somebody using our software and they need help, you know, I suppose doing that correction submission, just contact the support team there and they'll help you out. Somebody's just asking, are Dublin City Council grants to be included as turnover?
It depends on the grant. It depends on what it's to be used for. It depends on the terms of the grant. So there's no, again, automatic answer to a question like that. If the person wants to actually provide more details of the grant into us, then we can take a look at it.
Perfect, thank you. Somebody's just asking, are there any plans to extend the deadline of the 15th of the following month for the eligibility review?
There are no plans to extend it because, again, from the start of the scheme, people were supposed to be doing this end of month review by the end of the month. So there's an extension of 15 days to allow that information actually be input to the system. So there's no plan to extend that beyond the 15 days into the following month.
Perfect, thank you. Conscious, Anne, that we've had you talking for a long time, and I'm just looking at the questions, and a lot of them kind of are repeat questions. I don't know, I think we have covered most of them there.
If something comes up, Audrey, that you see that hasn't been covered, you can always send me an email and then send the response out to the attendees if necessary.
Brilliant, thank you very much, Anne.
So yeah, I guess we'll finish up there for today. As Audrey mentioned earlier, I know there is quite a few questions coming in about October onwards, and we don't have those guidelines yet, but we do have another webinar scheduled with Revenue on the 30th of September, where we will have all of that information and we'll be covering it and answering your questions. And we will have Anne and hopefully Colette back on again for that webinar. So yeah, I know we did cover a lot on today's webinar. So if you do have any questions, or if you want to watch it back in your own time, if you missed anything, we will be sending out the recording of the webinar to everyone by email later today. So I'd like to thank you all for joining us today, and a massive thank you again for Anne for joining us for today's webinar and last minute stepping in to present the slides as well. So thank you. Bye.
Thanks. Bye-bye.